Hi, thanks so much for joining in. My name is Alex Matthew and we're talking about Budget 2025 and how it relates to you. The Union Budget is about the government's plan for the new financial year. The Finance Minister lays out her estimates for what she wants to spend on and how she intends to fund it. And often the focus is on the big picture. What is the spend on capital expenditure going to be? How many roads, how many highways, how many new railway lines? What is the spend on defense? But very often you, the individual taxpayer, there's nothing for you. This time around though, you're the primary focus. A lot has changed when it comes to the taxation of the individual taxpayer, and this show will get you up to speed in case you missed some of the announcements. Let's first introduce our experts for the day. We've got Samir Kanabar, who's tax partner at EY India, as well as Mayur Shah, who's also tax partner at EY India. Gentlemen, thanks so much for joining me in the studio. And what a day. I was looking back and trying to gauge when such a large announcement has been made that was focused primarily on putting more money in the hands of the individual taxpayer. And you have to go back all the way to before this century even started, when there was a reduction in the highest tax rate. That was done, I believe, in 1997.
That's right.
Right?
Yeah.
So, is this only my interpretation, or do you agree that this is as big as I think it is?
Yeah, it is as big as you were saying. And I think, it's much more than that. Because what they are trying to do is just not in one aspect. They are trying to bring a lot of clarity in the law itself. And few of them we will reveal it during the discussion. But one thing which I have seen that in ULIP, earlier, under certain ULIP situations, it was taxed at normal rate of tax, which now they have brought it down to 12.5%.
But we'll talk about that in just a bit. For me, the more important talking point, Mayur, is about the change in the slabs and the change in the treatment of income tax. That is the first and foremost thing that you need to focus on. What you see on the screen is now what is effective in the next financial year, FY26, the financial year ending March 2026. Now, the new tax regime is where all of the changes have taken place. The first and most important thing that you need to bear in mind is that income up to 12 lakh rupees is something that you will get a rebate on. So effectively, you will not pay tax on that. We'll talk about how that works. But beyond that, there's also been a widening of all of the tax slabs. The first slab is increased from 0.0 to 3 to, in fact, 0.0 to 4. That's exactly what you see on the screen. The second now has moved to 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, and then finally above 24. So previously, if you had the highest bracket that was above 15 lakh rupees at 30%, now the highest bracket is above 24 lakh and it's at 30%. My interpretation of that, Samir, correct me if I'm wrong, and I've just simply done a rule of 72. You look at 10 lakh rupees in 2010. In 2025, that is worth roughly 24, 25 lakh rupees. So effectively, you're adjusting for inflation. I know you disagree with me, but it's a significant move.
Yeah. No, so yeah, you are right. There's two ways to look at it. Is the government supposed to pass on the benefit of inflation to the taxpayer, or is it that government is also incurring the cost on its own and meeting its inflation targets, and hence whether one should balance it out? But more importantly, Alex, I mean, the way we look at it is to say that it is the overall speech which we saw yesterday and the economic survey that middle class should be given benefit. And that theme is being carried along all the way, whether you look at rural sector reforms, whether you look at agricultural reforms, or income tax. Everywhere, I think the Aam Aadmi is the focus area. And this is an unbelievable leap that has been given right from 7 to 12. So beyond imagination.
Beyond imagination. And what that means effectively, without doing away with the old tax regime, Mayur, effectively, we've done away with the old tax regime. It doesn't make sense anymore.
Absolutely. Generally, if you have a deductions up to between 6 to 8 lakhs, then probably old regime may be beneficial.
6 to 8 lakhs is a lot.
Yeah. And when you are having a larger income bracket, then it really doesn't make sense going with the old rates at all, because the rates are very high. Surcharge rates are very high. Then you will always choose to be under new regime. So if you see, large section which was there under old regime will now again move back to the new regime. And effectively they will make old regime redundant.
They have, in fact, made the old tax regime redundant. Of course, there was a teaser in the budget also where the finance minister talked about a new income tax bill, and she said that a lot of clarifications will come through in that bill. The language will be clearer for you to understand, and the content of that bill will effectively halve. But there's also another data point that we have for you that will essentially measure out how much your tax outgo will reduce, new tax regime versus new tax regime. If we can, let's pull that up, because, and we're looking at income above 12 lakh, right? So if you can read that on the screen, if you are earning 13 lakh rupees, then effectively compared with the old new tax regime, you are saving 25,000 rupees. That increases to 35,000 rupees at 15 lakh, increases to 50,000 rupees at 16 lakh, it increases to 90,000 rupees at 20 lakh, and 1.1 lakh rupees and beyond. So 1.1 lakh rupees on 24 lakh and beyond, which is a very significant saving. Wouldn't you agree?
No, absolutely. And as you know, both of you rightly said that without dismantling the old regime, they have dismantled, and once you are above 20 lakhs bracket, for you, the old regime will not look so good, because you have to make compulsory investments, you have to confine yourself to all the realms and pay higher surcharge. Might as well go under the new regime. You have your own freedom of investment, and then sort of you are covered by this new regime. So obviously, yes.
Let's talk about the deductions that are currently available, just to elucidate the point further. In the new tax regime, Mayur, you still have that standard deduction for salaried individuals to the extent of 75,000 rupees. And there's also NPS, right? Which is available?
Yes, NPS is available.
Yeah. So can you explain that?
Yeah. So what happens is that when you contribute towards the national pension scheme of up to 10% of your basic salary, or 10% of your total income, which now last year they have raised it to 14% under certain circumstances, then that would be allowed as a deductions, which continues to be allowed in the new regime as well. Because, and the reason for that is that they want to create social security environment self-funded rather than funded by the government. So that's the reason why they are doing it in that particular fashion, and they are allowing it. As far as standard deduction is concerned, long back they had introduced standard deductions for new regime, which was then enhanced to 75,000 if you are going for new regime, otherwise it was less.
Yes.
So that's where they tried to encourage, and now they are kind of putting more stress on the new regime than old regime.
Certainly. So just to drive home that point, and you were making that, people in the slightly higher income ranges, they don't have to make those necessary investments for ATC deductions. They don't need to necessarily put money. And so what happens then effectively is the tax saving investments that were usually saved to the end of the year, and you will know this, and a lot of chartered accountants will breathe a sigh of relief saying we don't have to do anything towards the end of the year. That goes out of the window.
Absolutely. But before I come to that point, I think one important point to note in this slabs, and where there is slightly an ambiguity, that let's take two examples. You have 10 lakhs of salary income, you have 2 lakhs of capital gains.
Yes, this is important.
And you have 10 lakhs of salary income and you have 5 lakhs of capital gain. Now, in the second example, it's very clear that you have to pay on 5 lakhs capital gains tax. But obviously, because you have crossed the threshold, so on 10 lakhs also you will end up paying tax. It's not that your 10 lakhs remains protected. But the issue that comes in 10 plus 2 example is that whether 2 lakhs should really get taxed as capital gains, and that clarity is not there. So it's kind of an open thing, and that kind of leaves a room, but of course it doesn't impact people at large.
So, but let's explain what this is about, right? In the speech, the finance minister has spoken about special income, right? Income from other sources, can you call it that?
Yep.
Special income. So she used special income as a tag, right?
So capital gain tax at a special rates.
Tax, okay. So income taxed at special rates. Effectively, what she has said is that you will get a rebate on your income up to 12 lakh rupees, taxable income up to 12 lakh rupees, apart from the income that is taxed at special rate. And we looked at that print, we looked at the clarification in that document. What did it say?
Yeah, so they have added that piece, and I'm just because they have added by way of a proviso saying that whatever new tax regime rates are there, you will get rebate only in respect of that. That's how they have eliminated any income which is taxed at special rate will not get covered therein.
So this is capital gain. So as an example,
Correct.
if we talk about 2 lakh rupees, as Samir just pointed out, that you have booked as capital gains in the equity market in any given year, and it is long-term capital gains, just for this example, we're talking about it having crossed that 1.25 lakh limit for charging of long-term capital gains tax. So you will effectively pay 12.5% on 75,000 rupees. And what they're saying in the clarification is that you will get a rebate on your income if you have income in normal sources through up to 12 lakh rupees. And on this 75,000, the 12.5%, you will not get the rebate. That is the understanding, right?
That's right.
Okay, so it's pretty clear on that. Samir does not agree necessarily, but this is the interpretation that you can take right now. And of course, over the course of the next couple of days, there will be more clarity that emerges. But as things stand, that is indeed the case. So effectively, you're talking about a situation where ELSS and your several other investments that are made towards tax saving, 5-year fixed deposits that you would necessarily lock in, your public provident fund, so many other schemes that people invest in towards the end of the year just for the purposes of saving tax, it does not necessarily make too much sense anymore. You might as well invest in assets that give you a little more flexibility and possibly better returns.
Because all this ELS tax saving scheme used to offer a very low rate of return.
ELSS is of course equity linked, and so it depends on the market, but a lot of others agree with you.
Yeah, and that's where you are getting now more advantage, like in terms of investing in a market where you feel it is much better. And ELS also, which security you invest in, how you keep churning, that will all depend on now.
Okay, so there are a couple of other changes, of course, apart from the tax slabs, and we've pretty much gone through all of the details here. You are better off no matter how you split it, no matter how you look at it, you are going to be paying less tax in the new financial year. And we've established how much as well. Now, there are a few other changes that have been made, and the first one I would like to talk about is with regard to the tax deducted at source for senior citizens. There was a pretty straightforward announcement that was made, but let's spell that out for you. I'll come to you, Samir, on this. What was said and how does it change the lives of senior citizens?
Yeah, so effectively, of course, they have done an overall rationalization of withholding tax or TDS provisions, and it encompasses a lot of things. And one of the component is, of course, relating to senior citizen as well as rent income and etc. So obviously, they have enhanced the limit from 50,000 to 1 lakh on the income earned by interest income earned by the senior citizens. So that gives them quite a bit of relief. Similarly, they have extended the rental income limits from 2.5 lakhs to 6 lakhs odd. That again gives a lot of relief to the individual in terms of withholding tax.
This is only senior citizens though? Rental
No, this
income?
is for everybody. The rental income is for everybody. Yeah. So,
okay.
So that gives again a huge relief to individuals, because you don't have to deduct if you are paying the rent, and at the same time if you are earning, your working capital to the extent of withholding tax doesn't get blocked naturally, because you have now moved from 7 to 12 lakhs. So I think they have really applied their mind. They have not done one small patchwork of 7 to 12. Sorry, it's not right appropriate word to say patchwork, but by giving that relief, they have done a holistic approach to see that even the TDS provisions are appropriately amended, so that people don't feel the pinch and that money is still in the pocket of the middleman.
That's right.
For consumption or for expenditure.
You have a point here?
Yeah, so just one point. When we are talking about rent, it talks about the rent which is being paid by the businesses. So individual, when they are deducting TDS, it does not relate to that. But when individuals are receiving rent above 6 lakh, then only there will be a TDS. So it is in respect of that. Many times which has been misunderstood.
Yeah.
That when individual is paying rent, then you should not deduct, or things like that. But it's not the same.
Okay, I take the point. So only because in the past the changes that have been made are incremental, small changes, and so the accusation has been that the government is tinkering with the Income Tax Act. It is trying to provide as much relief as it possibly can, and so it's tinkering. It may not be a patchwork, but this time around, it's a very holistic approach that they have taken in order to make it easier for individuals from the perspective of
having cash available with them.
Yeah, and also putting more hands in the hands of the people.
That's right.
Money in the hands of the people. Yeah.
In fact, if you look at senior citizen, now TDS as TDS on interest has been announced from 50 to 1 lakh.
Yes.
No TDS. Look at senior citizens are not even subject to advance tax. Therefore, money which is available with the senior citizen will be much larger.
Correct.
And that will be available in the economy for its spending.
So just to complete the point on TDS on interest income, if it crosses that 1 lakh mark, what happens?
No, then of course you have those declarations 15H and all of that, which you can still give and still not withhold the tax, but otherwise the tax does get kind of...
To what extent?
Full. Then on entire interest, you have to pay TDS.
On the entire interest, you have to pay TDS. Okay. The rental income component is also significant. There's also tax collected at source, which there is a change on. And this has to do with the liberalized remittance scheme. Why don't we talk about this? Because here, the threshold limit has been raised to 10 lakh from 7 lakh rupees. Why is this significant, Samir?
So, of course, LRS is more of an open economy measure, which we have been seeing over a period of time. And we are seeing a lot of people traveling, going abroad, people are doing overseas investments. Now, again, holistic perspective, 7 to 12. Now, if I am within lesser tax bracket, or I'm paying, even I'm say 15 lakhs, 20 lakhs bracket, but if I'm traveling abroad, I'm paying TCS.
Tax collected at source,
and then I have to claim a refund, which I'll get after I file my return.
How does this TCS work? And for those who are wondering what this is about and who are yet to make their first trip abroad perhaps, and I wish that you do so in the new financial year, but this is essentially the liberalized remittance scheme, the LRS, which allows you to take money out of India. There is a limit of $250,000?
Yes, under the FEMA.
Under the FEMA. So this is the Foreign Exchange Management Act. You're allowed to take a certain amount of money outside of the country in any given year. And so these rules govern all of your spends that you would make, even investments that you probably are doing in, say, a mutual fund abroad or in a particular stock. If you've bought NVIDIA, then this is something that you should pay attention to as well. So just to drive home that point, why don't you complete the point you were making?
Yeah, so under LRS, as you rightly said, people are allowed and encouraged to make overseas investments, travel, use money for education purpose, whatever. Now, if till now, the limit was 7 lakhs. So up to 7 lakhs, there was no TCS. How does TCS work? The way TCS works is that you are remitting money outside India. So bank will collect the TCS and deposit with government.
How much?
That was at the rate of around 2%. Now, of course, it has been increased from 7 to 10 lakhs. So bank will now deduct the TCS and deposit with government. But the point that I was trying to drive is that if my income bracket is such that 12 lakhs 75,000, or even if I'm 15 lakhs bracket, if my tax liability is only so much, or my employer is deducting tax, then this TCS, which is collected by the bank and deposited with government, I have to claim refund.
Yes.
Right? And again, that doesn't leave money in my hands to spend. So to allow that as a, again, holistic approach, that they have enhanced this limit as well, to allow from 7 to 10 lakhs, so that of course I am still not pinched by my overseas expenditure, or whether I'm traveling or whatever. And second part is education loan.
Yes.
So if I have taken a loan for which I'm making LRS remittance, now it has become 0% TCS. So no TCS. Earlier, of course, it was 1.5%, but now it has made 0%. So if I've taken a loan and I'm using that loan for education purpose of my children, then on that no TCS.
There is a clarification though on type of institution. Which are these usually?
So it has notified institution from whom you can take this loan, then it is allowed as a this thing. And it covers almost all institutions.
banks, yeah.
Okay.
Right? So there is one more clarification here. And if you look at the theme which he started with, when Finance Minister started its speech, okay, we want to move from, trust that everybody is doing right and then audit. So TDS and TCS were introduced because income was escaping from taxation, especially TCS. Right. Now, if you see that they are trying to rationalize that, by doing that, they are saying, okay, we trust you that whenever you are remitting money, we are assuming that it is out of tax paid money only and there is nothing which has escaped. Yeah. So, as rightly pointed out by Samir, that the theme which they are doing, they are not just applying on one or two provisions, but they are applying across, where all these have an impact and they are covering all these aspects together.
The spirit of the reform is across the board. It's something that is applied in all of the changes that they have made. And to that extent also, the second last thing that I want to talk to you about today has to do with self-occupied properties. And this is an interesting one because by my understanding how things work, and the two gentlemen here, the tax experts, will tell you what this is, but this is my understanding of it. Previously, if you had two self-occupied properties, then you would not pay tax on the deemed income. So you would have to assume a certain income that you would receive as rental income, and you would have to pay a certain amount of tax on it. But you would not have to pay this tax if you fulfilled certain preconditions. One of them was if you had to move away from that self-occupied house for the purposes of employment. Another was that if that self-occupied property was actually vacant. Now, what they've done now is to do away with those requirements completely. Samir, can you explain that?
Yeah. So earlier, if you had two houses, and normally what happens under income from house property chapter, you have to notionally compute rental income and you have to pay tax. But the law allowed you that up to two houses, you can say that these are self-occupied by me and hence I need not pay any rent. And of course, if you had third house, then you will pay rent on that third house.
Pay tax on the rent of the third house.
On rent of the third house.
Yeah.
Right. Now, the condition prescribed for getting this exemption is that A, you should be occupying both the houses, and B, it should be a reason which is well justifiable that why you are not why this exemption should be given to you, right? Now that second condition is made more liberal. So if for any reason, even if you are not able to occupy either of the two houses, and so long as that is a rational reason, say you are traveling or you have one house here and one house in suburbs, say you in one in South Bombay and other in suburb. So you keep on switching between the two as required based on your work condition.
Okay.
And hence one remains empty for some period of a time, other remains empty, then that is acceptable because of your work reasons, whatever.
But now that's not required at all.
Yeah, so now that condition has been now liberalized. But if in the same city you are saying that you have two houses and you are claiming for both and you are staying in one and not staying in another, it becomes challenging, right? Because that was not a justifiable reason. So you will now be allowed that much of liberty to say that, okay, this was the reason and hence I need not pay that.
Okay, so it's certainly an improvement and it's less of a pressure on you to justify certain exemptions that you are taking. The last point has to do with what you started with, which is the change in the ULIP treatment, unit-linked insurance products. What was it? Because there was a little bit of a confusion at the start about this. What's the change?
Yeah. So, ULIP, any maturity value which is being received upon on ULIP would be tax exempt, provided there are two conditions which are being met. Those two conditions are that, the annual premium which you pay should be less than 10% of the sum assured. And second is annual premium should never increase or should not be more than 2.5 lakh rupees. Now, if you don't meet any of these conditions, then you are not entitled to exemption. Now, what happened that while defining capital assets, they have added these two conditions also in that definition. As a result, If you breach one of the conditions, and just to give you an example, that you have taken out insurance policy of say 50 lakhs and you are paying premium at the rate of 9%, so you have paid 4.5 lakhs. So you are not meeting one conditions. Though maturity value will be taxable, but whether that will be considered as a capital asset, because you are not meeting conditions, it will not be even treated as a capital asset. As a result, on that, you will end up paying normal rate of tax.
Which is slab rate.
Which is a slab rate. Now they are thinking, no, this should be considered as a capital assets. So now you pay tax at the rate of 12.5%.
If you meet those two conditions.
If you don't meet any condition also is fine.
Okay, so it's a positive thing.
Absolutely positive thing.
Okay, so even if you're breaching that 2.5 lakh, if it's more than that 2.5 lakh, it would be treated as a capital asset.
That's right.
Because that would be breaching one of the two conditions.
Absolutely.
Okay, so it's a positive.
Otherwise, you would have paid a tax at a higher slab rate, and of course, there was an alternate school of thought to say that it cannot be taxed at all because the law doesn't treat it as a capital asset.
But they've clearly defined that it is actually income from other sources, and so therefore there was a tax liability. But gentlemen, I think we've covered a lot of bases, and most importantly, we've spoken about the change in the tax slabs and the change in the new tax regime, and it's going to benefit a lot of people. I hope that we've clarified things for you so that you can talk to your chartered accountant tomorrow, or you can plan your tax saving next. You don't have to plan your tax saving because you'll have to move to the new tax regime and you have no deductions to make. So there you go. It's a great announcement that the finance minister has made today, and I hope you liked it as well.
And spend your money.
And spend your money. And go spend your money. Or invest it. You've got more money to invest. That brings us to the end of this particular edition of the Budget 2025 tax conversation. And Samir, as well as Mayur, thanks so much for joining in.